Two major American timberland companies are merging, but is the deal about the trees or the land underneath them? Auto bankruptcies, we break down how the impact is now spreading as regional bank stocks drop, along with confidence in their lending practices. And Nestle has a new sheriff in town, the CEO moves we're watching. Thursday, October 16th, it's Brew Markets Daily, and I'm Anne Berry. More market details to come, but first, we talk a lot about food on this show, and the otherwise pretty sleepy sector has seen a lot of activity in recent months, and we've talked about it here. Keurig Dr Pepper announcing a merger with JDE Peet's to create a global coffee giant. Ferrero buying WK Kellogg, uniting a great American house of cereal brands and an Italian candy icon. Consumer preferences are really hard to predict and supply chains are pressured. And with the industry seeing transformational deals like those, one behemoth needed to make a bold move to keep up. So Nestle, the Swiss $200+ billion market cap food company, has seen its stock price drop 22% over the past 5 years. The maker of Kit Kats, Nespresso coffee, Häagen-Dazs ice cream, Perrier water, Hot Pocket sandwiches, basically all my favourite things, and lots of other household name brands, fired its CEO last month. Not, by the way, for underperformance, despite that mediocre share price, but for having an undisclosed relationship with a subordinate. Now, his successor, Philipp Navratil, isn't wasting any time making his mark as the new boss. Just 6 weeks in, he shared on a sales update call today his, quote, 4 big priorities. He said, "We will be bolder in investing at scale and driving innovation. Second, we must have a winning portfolio. I'll be looking at everything in a rational way. Where we aren't performing, I will act and act with urgency. Third, it is critical that we build a culture that delivers and rewards performance. Last, we are accelerating our business transformation and our cost savings plans to build a stronger company." So he really, in very clear terms, laid it all out there. Now, on that last point, cost saving, Navratil announced a cut in 12,000 white-collar jobs and a further 4,000 roles all over the next 2 years, increasing a prior cost reduction target by a third to $3 billion Swiss francs, just under $4 billion. Now, we often talk about how hard it is to do a turnaround as a public company. And we often ask on this show whether executives who grow up inside a business and spend a long time in one company can really look at it dispassionately enough to make tough decisions once they become CEO. Well, Navratil is a Nestle lifer, starting as an internal auditor there in 2001 and reaching the role of CEO of the Nespresso division specifically last summer. So his big and decisive opening move today signals awareness that investors are clearly watching for evidence that he has the stomach for change at the world's biggest food company. Well, today at least, the market liked what it saw, Nestle's stock rising 6% on his news. Well, coming up, 2 major American timber companies are looking to merge. We explore what the deal is really about, trees, but also solar panels. But first, a word from our sponsor, Capital Group. Now, our producer, John, has been listening to their new podcast called On the Power of Advice.
That's right. It's a new limited series from Capital Ideas and Capital Group. You hear real stories from people who have built businesses, switched careers, and stepped out of their comfort zones. Their success didn't come from a playbook. It came from listening, learning, and leading.
And if you're starting your own journey, this is the kind of advice you won't want to miss, published by Capital Client Group, Inc. Well, here on Brew Markets, we like to take a step back from the news of the day and the volatile headlines to make sure that we're always trying to see the forest for the trees. Well, earlier this week, there was news about both the forest and those trees because 2 of the biggest US timberland owners, Rayonier and PotlatchDeltic, I practiced saying that, announced that they plan to combine in an all-stock deal that would create the second largest forestry company in the United States. So on this one, I'm going to give a shout out to our producer, John, who's been saying for a while we need more merger moments, and he wants to do one on natural resources. So I'm really excited for this one.
That's right. It's really interesting, and digging into it, there was more to it than I expected. So let's just start with it being a play for wood, but it's also for the swaths of land under the wood where the trees are growing. So we're going to get into that. It's a real estate play as well. So the deal, PotlatchDeltic shareholders will get 1.7 shares of Rayonier common stock with the merger, which would value the company, the combined entity, at about $7 billion. The combined company would own roughly 4.2 million acres of U.S. land. That's 3.2 million in the south, nearly 1 million in the northwest, And additionally, the company will operate 6 lumber mills and 1 industrial plywood mill.
Well, this is important because I just thought it's worth shedding some light on just the sheer scale and reach of this business. So wherever you are as our listeners, Weyerhaeuser, let's just start there. One of the companies involved in this tie-up, they're in Oklahoma, they're in Texas, they're in the Carolinas, they're in West Virginia. We talk about these deals so often in a vacuum and we say that they're big and they've got scale, but I do just love to really bring it back to the states and the locations because this is literally in our backyards for some people.
And you know what else is interesting about this, Anne? We can talk about a production facility in one state or another state. We're talking about a natural resource. A tree isn't a tree. We've got different trees that grow in the northwest of the United States and the south. So merging these, they're really coming together with different types of resources.
And again, just the sheer acreage here, 4.2 million. And just to put that in context, the combined company would be second to Weyerhaeuser, which is the company I just mentioned, with that kind of scale. Also a public company, ticker WY. Weyerhaeuser, like I said, in those states, owns 10 million acres in the US and has a market cap of around $17 billion. Its share price down, though, nearly 30% year over year. Commodities have had a tricky ride over the last couple of years.
Exactly, and especially recently with the tariffs. So let's talk about wood a little bit. It's had a whipsaw story this year. The U.S. imports about 40% of its softwood timber. So that's pine and spruce. That goes into home construction. That's important. And 80% of those imports come from Canada. So with tariff threats earlier this year, there was a stockpiling of wood from Canada, and so the price went down. Then there was clarity on the tariffs. The White House said that a domestic supply of wood is important to national security, and that sent the price back up. Then, of course, there are other macro factors. Mortgage rates have been higher. So at the start of the year, there were fewer new homes being built. Going back to the wood, that's important for building homes. So there was less need for wood. The price went down. The companies have slowed production. Then earlier this week, the White House put into effect a tariff on Canadian wood. And so prices are going back up. That tariff on Canada is about 45% on Canadian wood. And so there are so many factors to the story about wood, where it comes from, the international movement of it.
And where it goes, to your point, house building, furniture, where it ends up.
And it's not just cyclical, it's always changing. It's whipsawing around. But Anne, we're really talking about not just the product of the wood, but the land that it's grown on.
Now, these companies are being set up as REITs, which is short for Real Estate Investment Trusts, and land is the core asset inside these REITs. So essentially what's going on here is they're making money from selling the wood for the purposes we've talked about, but they're also monetizing the land that sits underneath it. And by the way, this isn't the first time here on Brew Markets we've talked about companies cleverly trying to figure out ways to sort of separate their operations into the real estate that sits underneath them and then what a company's doing to generate cash separately from operations.
Opco, Propco?
We talked about Opco, Propco. It's not exactly the same as what's going on here, but this is just another example of how clever financial engineering tries to unlock value from operations versus the land that these are sitting underneath them.
Because these REITs pay less in taxes because they pay out their quarterly dividend. So if they're bringing in profits, they pay it out as dividends. So the dividends are high in these two companies that are merging.
And actually, the press release around this deal, the combined company is going to pay a regular quarterly dividend that's in line with Rainier's current annual dividend of just under $1.10 a share, which actually is a pretty healthy dividend size.
And so if this is a real estate company, a REIT, this is also from the press release. The company is going to focus on carbon capture and storage, minerals, and solar utilities. And so when you get these companies together and all that land, Rainier launched its first solar field in 2023 in Texas. They say it clearly powers 30,000 homes and avoids 250,000 metric tons of CO2 emissions annually. So they're talking about these timber companies are landholders in the United States and all of the different ways that they can be stewards of that land.
But there is a lot to keep an eye on in this sector. There's a ton that's going on. There's a lot of conversation about stimulating the housing market again. We've seen that the White House is extremely focused on new home construction. We've now got tariffs on furniture imports. We've now got these tariffs on Canada. And then on the other side, we've got enormous demand for power and electricity that's going on. We keep hearing about it in terms of the AI cycle, but even more broadly, the demand for power and for new sources of power isn't going to go away. So to your point, whether it's solar or something else, something that we are going to keep an eye on. Again, you just never know when you dig into these stories when you're going to find some of these interesting nuggets. Let's take a quick break, and when we come back, concern that regional banks will sustain meaningful losses as a result of possible fraud in the auto sector. We're going to take a closer look. It's been a day of jitters in the market, and for a reason we flagged here on the show on Tuesday, so we're going to talk about it again. Well, earlier this week, we talked about how investigations into bankrupt auto parts player First Brands and car reseller Tricolor have kicked up focus on off-balance sheet corporate debt and also high-risk consumer loans. It's a lot of terminology, but stick with us. The words that are starting to flash red in these stories are fraud and subprime. And when those words crop up, it is never a good moment. Now, concerns that regional banks will sustain meaningful losses coming from the First Brands and Tricolor situations and then maybe beyond are now building. So let's start with Jefferies, which had its investor presentation this morning. And despite the fact it's been trying to reassure investors that it's focused on execution and landing deal flow in a really robust deal environment, its share price did close down nearly 11% as the day ticked on, as the markets couldn't shake off the bank's exposure to First Brands as something to really worry about. Also out in terms of news today, Western Alliance, which has roots in Nevada, Arizona, and along the West Coast, saw its stock drop 10% after the bank disclosed that it filed a lawsuit in August against a borrower called Cantor Group 5 LLC, alleging fraud related to a credit facility. It said it's kind of containing the issue, but the fraud is out there. And then Zion's Bank Corporation stock dropped 5% after posting an SEC filing that disclosed it had discovered, quote, apparent misrepresentations and contractual defaults involving $60 million of commercial and industrial loans in its California Bank and Trust division. Now, the amounts that we're talking about here, even the $2+ billion that seems to have just, quote, vanished in the First Brand situation, these amounts under investigation, those that are known so far, are actually not big in the grand scheme of the banking ecosystem, which spans more than $20 trillion in the United States. But the word fraud strikes fear into the hearts of the market. So the context for today's nudge down almost across the board as we watched share prices bopping up and down, but mostly down, a lot of it comes to the sentiment that these bank stocks are starting to fuel. Well, that's it, folks. It's 4 p.m. on the East Coast. The market's closing. There's our bell. Now, we're in the early throes of earnings season, so we have our sprinting shoes on. So we thought we'd start the first of a bumper rundown through the day's results, those that the market sat up and paid attention to. Starting with Taiwan Semiconductor Manufacturing, arguably the most important chip manufacturer in the world, reported a 39% increase in third quarter profit year over year. So it beat even lofty expectations as robust demand for its AI chips continued. Nevertheless, it did close down just under 2% today, just going to show for some of these chip names, outperformance just isn't good enough. You've really got to knock it out of the park.
Well, I married an Arkansan, and when I met her Uncle Walt, he half-jokingly said, John, you better get it straight. Here in Arkansas, we're about Walmart, Tyson Chicken, and J.B. Hunt Trucking. So it caught my eye today that shares in J.B. Hunt were up over 20% after the company reported earnings per share that narrowly beat expectations. Sales growth for the company has been sluggish amid a weak shipping economy, but J.B. Hunt's intermodal business expanded profit margins through cost control. And again, intermodal means freight that moves from both truck and rail. And reporting this evening, Pine Bluff, Arkansas's own Simmons Bank.
More on the banks. I actually got to say, J.B. Hunt, logistics services and freight shipping, I love those kinds of stocks. And one of the things we've talked about on the show is what are bellwether stocks? Meaning, what do they indicate about the broader economy? And we've got coming up next week, I think from memory, we've got UPS coming up. So another one that we're going to be looking out for. Now, one sector we love to talk about just because it's fun, honestly, it's just a human bias, and that's travel. And things were looking pretty rosy for airlines last week in particular, with Delta's latest strong earnings. But not all airline stocks are created equal, with United Airlines seeing volatility since earnings last night. Now, a few days ago, the stock gained nearly 2% on news that the company was expanding its transatlantic routes and had received certification for its first aircraft equipped with Starlink internet service. But this afternoon, down 9% as the market digested its lower than expected profits in the latest quarter. We're going to keep watching for those other airline earnings coming out as the season goes on.
And final numbers for the major indices today, the S&P 500 and the Dow were both down 0.6, and the NASDAQ finished down nearly 0.5%.
Well, just a final thought as we get through Thursday. It has been an incredible week here at Brew Markets for just incredible guests and conversations. Yesterday, we talked about the 1929 crash and what we could learn about market bubbles. We did that with Andrew Ross Sorkin. Tomorrow, we're going to bring you our conversation with Michael Lewis, author of The Big Short, the best-selling book, and also the book behind the award-winning movie on the lessons learned from the 2008 financial crisis. So we'll see you back here tomorrow. That's it, folks, for today's Brew Markets Daily.
Brew Markets Daily is hosted by Ann Berry and produced by John Crotteau, Tariq Abdellatif, and Emily Milliron. Our technical director is Uchenna Waogu. Audio assistance by Dan Bauza. The president of Morning Brew Inc. is Devin Emery.
Wake up tomorrow with the Morning Brew newsletter and tune in to Neil and Toby on Morning Brew Daily. We'll see you back here tomorrow, same time, same place.